Hey everybody, it's Jeff back with another weekly installment of Silver and Gold Market Update. In this update, we highlight where the premiums are, the paper markets, and the hedge funds, and help you guys stack smarter. We put these out every week so you could track along, know when to buy, when to sell. So let's jump right into it. The key factors affecting the market this week, honestly, it was a weird week. I'm in the markets full time, that's my job, and it just felt like something was different this week. The tech sector, the NASDAQ's been really volatile. There's a lot of popular stocks that are just getting absolutely crushed, down 20, 30, 40% in a week or two. But yet the Dow Jones is chugging along nicely. Interest rates are rising, although this week they've taken a brief pause. And as I mentioned in the urgent video yesterday, the coin market feels just a little squishy and weak right now. And another interesting note on collectibles, sports cards are down 20 to 50%. And those are way inflated. So even at the current levels, they're still up 50 to 100% from the same time last year. But you could tell that that bubble is in the midst of bursting right now. Top Shot was a virtual sports card, is way down, although that market is much tougher to track actual percent moves. Bitcoin has shown some small signs of weakness. It just feels like volatility is really picking up. And so funds have been selling silver and buying gold, not with major enthusiasm this week, but you could tell, as I'll show you, silver's been showing some signs of weakness here. This is an important table that kind of gives you the highlights. Silver spot was down $1.28. This is the lowest level since we started tracking this just back in January 29th. And as you can see, it's also the cheapest for the Silver Eagle. I'm taking the most expensive place to find it, APMEX, using their random year 1 ounce BU American Silver Eagle. And that's down to $34.60. Obviously, there's that infamous weekend, the whole silver squeeze that jumped premiums up to $12. Last week was a very important signal, in my opinion. I mentioned this was a bearish indicator when they dropped the premiums from 11 to 9, despite silver prices not necessarily being up in any major way. Funds have been selling regularly for the last 5 straight weeks, as you can see. They did edge premiums up just a smidge, and maybe a slightly optimistic note, JM Bullion, which is now 950 over as well, which is up $1.30 week over week. They were about $1.30 cheaper than APMEX last week, and they've gone right back up to on par at 950 over. So maybe the selling has hit a point where they're finding interested buyers for the physical, given that 34.60 an ounce is a full $5 cheaper than where we were on February 19th. Looking at the charts, this is not a pretty chart, honestly. It needs to hold this 25 level. Obviously, as you can see, it broke the trend line, so the bullish enthusiasm has kind of died off, and that's why the funds have been slowly selling this position. And if we somehow break 25 in any material way, it could really hit hard. Looking at the dollar, this is by far the most important chart for commodities, and it has been begrudgingly strong. And in my opinion, it's simply because it's, as everyone knows, obviously the government's continuing to print money. And typically the belief is, well, if they're printing money, the dollar has to get cheaper. Well, they essentially just printed the last of their money. At least that's what the market thinks. There's going to be no more stimulus. That's a popular belief. I am mostly there as well. And the dollar index is majority European Union, or the euro currency, whereas now the European Union is printing money. So they're kind of depressing the euro, and that's putting strength in the dollar, which is not helping spot silver or spot gold in any big way. So kind of looking at the key factors, I mean, the physical market premiums, I guess, are neutral. It's good to see that JM Bullion had to ratchet theirs up a little bit. The hedge fund positions, I would say, it's a tough call. On one hand, they have less to sell, but they seem to be in a selling mode. So I guess it's probably more bearish than neutral, but it's hard to be overly bearish. The dollar index at this point is still bearish, as it seems to be more in an uptrend, and charts are not looking great either. We need to watch that $25 mark. Looking at gold, as you can see, it was down $12 week over week, but still in the general range of that mid 1700. It found nice support right around 1700 a few weeks ago. And the premiums have remained strong, 180 over. And again, JM Bullion, which was $64 cheaper or $65 cheaper last week, have ratcheted up. They sold out of those cheap 1 ounce gold eagles, and now they're right at around 180, as you can see, 179, and the funds continue to buy. So I'm going to put out a video this coming Wednesday. I bought my first physical gold that I've ever owned. I've owned gold in the paper markets, but I'm going to release a video on Wednesday. So definitely subscribe if you aren't, as to the strategy of how I'm buying physical gold. Looking at the gold paper market, I think it is a mildly bullish chart. In a perfect world, we'd break above that 1765. That would be a really good sign. The funds would see that as reason to buy in a big way, and they would push that paper market up pretty quickly. Until that point, though, we're probably going to be kind of choppy and range bound, especially if silver's kind of fallen off and the dollar's rallying. So kind of looking at gold, the physical premiums I think are neutral to even bullish, given that they're not going down, even though silver has. The hedge fund positions are definitely bullish since they've liquidated about 75% of their length from the highs, and they seem to be in a buying mode the last few weeks, and I would guess they're going to continue to do that. But the dollar index is a headwind, so it kind of puts us in a fairly neutral to slightly optimistic point of view on gold. That's all I have. Thanks for watching. Take care.